in activity-based costing, we don't just have one overhead absorption rate. We're going to recognise the fact that a lot of production overheads are not volume related, and therefore using a single basis for absorption is not actually going to reflect the complexity of producing those products. What we're going to do is we're going to think about different activities and the way that those activities are driven by different things. The overheads mainly represent the costs of service support functions that ensure efficient, high quality production. Now these can be classified as this list here. So we've got order processing, we've got things to do with resource scheduling and procurement, we've got things to do with setups. So for example, in the modern business environment with a lot more customization and complex products, there's much more need to have many more setups because you've got much smaller volumes of production. We've also got a lot of quality control, we've got maybe storage and distribution. And of course that may be costly if customers are dispersed geographically. Now all of these overheads are driven by activities related to complexity and diversity and not production volume. Let's just think of an example for a moment. Let's just say that we have some setup costs, and this is the cost of setting up the machinery, and they are $1,000. Now if we're going to do a batch on them, and the batch is for 1,000 units and they're all going to be the same, then that's a cost of $1 a unit. But because of a lot more customization, a lot more complexity and diversity in the products, then maybe we can only do 10 units on that particular setup before we have to change it to something a little bit different because another customer wants something else. Now that's going to change the cost dramatically. It's going to now be 100 for each unit. Now that's going to have a really dramatic impact if we're using those costs in order to set our selling prices. And we certainly need to reflect that. Now activity-based costing is purely an extension of absorption costing. So instead of having one rate, we're going to have a number of rates. And what we need to do is think about what the cost drivers are. And there's going to be more than one cost driver. Each type of overhead that we actually identify is going to be absorbed using a different basis depending on the cost driver. So in theory, the number of cost drivers we might have, and therefore the number of overhead absorption rates we might have, is unlimited. But clearly that's not going to be practical in reality. In lecture example 1, we've got to identify which of the following statements is not correct. Now be wary of these types of questions because sometimes you may be asked what statements are correct and sometimes which ones are not correct. So it's very easy to get them the wrong way round if you don't read it carefully. So let's think about statement A. So activity-based costing is an alternative to traditional volume-based costing methods. And the answer to that is yes, that's fine, that's good. It is, all we're doing is extending the range of cost drivers that we use. So it is just an alternative. It's a different form of absorption costing. And that also takes us down to D, which says exactly that. Activity-based costing is a form of absorption costing. So both A and D are correct. Statement B, activity-based costs provide an approximation of long-run variable cost units. Well, this is actually true as well, because in activity-based costing, we make the assumption that all costs are actually variable in the long run, and they're all variable in relation to a particular cost driver. So that's something that you may hear again. That only leaves us with statement C, and activity-based costing cannot be used to cost services. Well, that's certainly not true. Activity-based costing often is used to cost services. In fact, it can be more useful in service-based organisations than in production-based ones. So that is the only one that is not correct. So let's look at the steps involved in activity-based costing. Now the terminology is quite important here. So these are phrases that you should really come to grips with and to learn them quite well. So the first step then is to group our overheads into what we call activities. And we're going to do that according to how they are driven. In other words, what causes them. Now in questions this has normally been done for you, so you're not actually going to have to group them, but what you may have to do is identify a cost driver, which we'll look at in the next stage, to each activity. Now we're going to call these cost pools. So it's a little bit like cost centres, but they're not collecting places as such. We're going to call them cost pools, so they're activities. The next thing that we're going to do is for each one of them, we're going to identify a cost driver. In other words, what is causing that activity to be incurred? As I said, these normally given to you, and what you normally have to do is match them up with the activities. In step 3, all we're going to do is calculate a cost per unit of cost driver. In other words, an overhead absorption rate. And we're going to do as many as we've got activities. So in a question, you'll probably have 4 or 5 to calculate. And then finally, we're going to absorb the activity costs into production based on the usage of the cost drivers. Just like you would do in absorption costing, but you're not going to do it once, you're going to do it however many activities and cost drivers you've got. So if we look at the diagram here, you can see that here we've actually got 3 activities, and all of the costs that we've identified have been grouped into those activities or cost pools. So we've got production setup costs, we've got machine oil and machine repairs, and supervisors' salaries. Next, we've identified what is causing those costs to actually be incurred. So let's go to the machine oil and machine repairs first of all, and as predicted, we said, well, actually, machine hours could nicely be linked to that. However, the production setup costs, if we're going to actually incur a cost every time we set up the machinery, then the number of setups is going to be the thing that drives that total production cost. So the number of setups is going to be what we use as a cost driver for that particular cost pool. Supervisor salaries, on the other hand, are going to be linked more to labour and the amount of labour that they have to supervise. So the more labour hours, the more need there is for supervision. So the final cost driver is going to be labour hours. Now that means that when we're going to allocate and absorb these activities into production, we're going to have 3 sets of overhead absorption rates to use, and therefore we'll have 3 lumps, if you like, of overhead absorbed into the cost of our units. Now, one of the things that we can do is we can think about our cost drivers, and we can think about the fact that they actually occur at different levels. In other words, we can do some cost driver analysis. Now, we've got 4 categories for activities and their related costs. Why is this important? Well, it basically tells us whether activity-based costing will give us more useful results than traditional absorption costing would do. Now, it's actually quite expensive to set up systems to allow you to do activity-based costing, and unless you're going to get some useful information from it, then really there's no need to be using up precious money. So let's have a look at this table. In order to do it, let's think about an airline company and use that as an example. So some of the costs that this airline company incur are going to be at what we call unit level. Now let's call the unit level a passenger. So what type of costs will be incurred per passenger? Well, they're going to be direct costs. So things like any meals that you might give the passengers on a flight, or drinks that they're going to get on each flight. So the cost driver is going to be the number of passengers that we actually carry. Now, moving up to what we call batch as a category, let's call this a flight. So what costs are going to be incurred every time we have a flight? Well, we've got the pilot, hopefully. We've got the cabin crew, so the stewardesses and stewards of the airline. So the number of flights that we actually do is going to drive the cost of those. Now at product level, let's just say that this is a route. So what sorts of costs would they have here? So this might be things like the airport fees when they have to land and depart from different airports. They have to pay the airport some money to do that. And therefore the number of routes is going to be the driver of that overall cost. And then we've got facility sustaining. Now this is the overall company. This is the airline itself. And they might be things like the head office costs that they have. So they've only got one head office, and therefore the number of companies, of which there's only going to be one, is essentially going to be what drives that cost. Now, if most of your costs are actually incurred at batch or product level, then activity-based costing is going to be a great deal of help. It's going to give you a lot different information than you would get from using traditional absorption costing. If most of your costs, however, are at either unit level or facility sustaining, then it's not going to give you very much different results to what you get with absorption costing, because there's not as much complexity and diversity as there would be in a batch or product type of setup. So this is really to do with, how useful activity-based costing is going to be.
There are three different types of cost driver which you need to be aware of then. The first one is the transaction driver. Here, the cost of the activity is affected by the number of times the specific activity is undertaken. This could be the number of setups, or the number of power drill operations, the number of batches of material received, the number of purchase orders. The idea here is it's something that takes the same amount of time and the same amount of resource each time this transaction or each time this exercise is undertaken. The second type then is less related to the amount of time that it is per item, and it's more to do with how the activity is affected by how long it takes to perform the action. So this could be setting up the machine, because for some products setting up the machine could be more time consuming or more complicated than for others. So if you think about setting up your photocopier to print one sheet of paper once, then that's going to be less time consuming than setting it up to print a double-sided document that you want multiple copies of in colour, stapled, etc. The final one then is an intensity driver. This is when duration is not going to provide an accurate result, and it changes every time the activity is performed. So what we do here then is, with something that's more complicated, then the cost of the more complicated setup is charged directly to the product which causes it to occur in the first case. Another example could be then that for purchase orders, we could consider that those two retail customers, individual customers, are going to be more onerous than perhaps those that are going to trade customers, for example.
In lecture example 2, we're going to go through both traditional absorption costing and activity-based costing for 3 products for a company called Dodo Limited. Now, they've got outputs of 3 different products. You can see from this that one of the products, product C, is a much lower volume than the other 2. We've been given some costs and selling prices there, and we're told that the total overhead cost is $190,000. So, in part A, we're going to complete this table to calculate the profit per unit if we use traditional absorption costing. So let's start off with just transferring some of the data that we've got from our question into this table. So we've got materials cost, which is 5 for A and 10 for B and 10 for C. We've also got labour cost, Now, in the data we've been given the labour hours per unit, and we're told that it's $5 an hour. So all we need to do is multiply these by 5 to get our costs. Therefore we've got 10 for A and the other two are 5. So the prime cost of all three of those products is actually 15. Now we need to work out the production overhead, and to do that we're going to use labour hours. So let's calculate what the overhead absorption rate will be first. Now to do this we need to work out what the total amount of labour hours are in the year. So we've got $190,000, and if we take our units and multiply them by the number of labour hours, so we've got 20,000 units of A, and that takes 2. We've got 25,000 units of B, and that takes only 1. And we've got 22,000 units of C, and that takes 1. And if we do all that, that comes to 67,000 labour hours. If we work that through, we get to $2.836 per labour hour. So when we absorb this into our products, A is going to get 2 times it because it's 2 hours, and B and C are only going to get 1 hour's worth. So 567 for A, 284 for B, and 284 for C. So those are all the costs. If we take our selling prices, which are the same for all of them, which is 20, then we can work out the gross profit per unit by taking the costs from the selling price. And for A, we actually end up with 0.67 loss. B is $2.16 profit, and C is also $2.16 profit. So we'll come back to these later when we've looked at activity-based costing and see how they compare. Now we've got some more information. The following data is now available. What we've got is the 190,000, and it's been split out into 4 activities known as cost pools. So we've got machining, quality control and setup costs, receiving and packing. And you can see the one that's incurring the most cost there is the quality control and setups. What we're also given is some other data. So cost driver data relating to each 3 of these products is the labour hours per unit, which we had already. We've also got machine hours, the number of production runs, the number of component receipts, and the number of customer orders. So our first job is going to be to come up with an overhead absorption rate for each of the cost pools. And for doing that, we have to actually decide what cost driver goes with which cost pool. So let's start off with machining. Now we've got $55,000 in that cost pool, and looking at the cost driver data here, the most sensible one to use would be the machine hours per unit. Now clearly we've been given the actual machine hours per unit here. Don't make the mistake, which is a very common mistake actually, of just adding together 2, 2 and 2 to get 6. And that's going to give us a really, really large amount per machine hour, but it's actually incorrect. What we need to do is multiply it by the volume. So let's do that on another working paper. So on the top for machining then, let's just put machining. We've got $55,000, and we're going to divide that by A. So A is 20,000 volume, so it's going to be multiplied by 2. So there's 40,000 machine hours in total for A. And for B, is also 2, but there's 25,000 units, so that's going to be 50,000. And for C, okay, let's go on to the next one, which is quality control and setup. So this is 90,000. Now the thing that's going to drive that is the number of production runs. This time it is in total, it doesn't say per unit, so this is the total production runs for all of those units of production. So all we need to do is add those together. So let's do that. So let's just call that QC and setup. So we've got $90,000, and that's going to be divided by a total of 10 plus 13 plus 2, and that is equal to 3,600 per production run. Now there is a reason why I'm putting these separately on the formula, on the denominator of the formula. You'll see that in a moment, what the use of that is. Moving on then to receiving, so we've got $30,000 in there, so it's not too difficult. We've got the number of component receipts, and again that's not per unit, so that's in total. We've got 10, 10 and 2. So this one is $30,000, and we're going to divide that by 10 plus 10 plus 2, and that gives me $1,363.64 per receipt. Okay, nearly there. And the last one then is packing, and that must be the number of customer orders. So in total we've got 20, 20 and 20. So they actually use the same. So this 15,000 actually should be spread evenly over A, B and C. But let's work out the cost driver for it. So we've got $15,000 divided by 20 plus 20 plus 20, which is 60, and that gives $250 per customer order. Okay, so these are our cost driver rates. All we've got now to do is to apply them to our products. Now you can see in this table that we've got the actual total amounts, and the best way to approach an activity-based costing problem like this is to work on totals to start with. Then what we're going to do, when we've got the total, we're going to divide it only once by the number of units. There is an alternative way that you can do it where you actually work out the cost per unit as you go along, but it just means that you've got to do that division many more times. So I would always advise you to do it in totals first and then do that right at the end. So let's start off with machining. Now we need to spread that 55,000, and we're going to use our cost driver in order to do it. Now this is where laying it out like this helps, because we know we've got $0.585 per machine hour, and for product A we've got 40,000 machine hours. So all we need to do is multiply 40,000 by 0.585, and that's going to be the answer that we need to put in to the table. So that will be 23,400. If we multiply 0.585 by 50,000, which is the next one, we end up with 29250, and then by 4,000, 2340. Now, if you add that along, you might spot that it doesn't actually come exactly back to $55,000. It comes to 54,990. So why has that happened? It's happened because we've rounded the overhead absorption rate. The actual overhead absorption rate is 0.585106, blah de blah de blah. Okay, so it actually does go on for some way. Now you're always going to have to round these. Unless you actually do the calculation all in one go, you're not going to get an exact answer. So don't worry about that in the exam. You're never going to be penalised unless you've rounded unreasonably. So unreasonably here would be if you'd rounded it up to, say, 60 cents instead of 0.585. So you might have even rounded to 0.59, and that would have been okay. So we're going to leave it like that. If we were doing this in one calculation, then we'd get back straight to 55,000, but it doesn't matter. You're not going to be penalised. So please don't spend time trying to make it work and add back to 55. So the next one is quality control and setup. So we need to split that 90,000, $3,600 per run. So for product A, we times it by 10. That's going to be 36. Do that in black. $36,000. If we do the next one, it's 4,600 and then 7,200. So that one does come back to 90,000. So receiving is next. So this is another one that we've rounded. So we'll stick with what we've got there. We've got 1363.64, and we need to multiply that by 10 for product A, 10 for product B, and then only 2 for product C. So 13636 for the first two, and only 2728 for product C. Now packing we said was equal, so we can actually either multiply $250 by 20 for A and B and C, or we might just be able to spot that it's all equal and divide $15,000 by 3. So that's all of our costs done. What we need to do now is add them up. So we end up with totals of 78036, 94686, and 17268. Now your rounding is going to come out in the wash, because what we're going to do is divide each of these by the numbers of units produced, and any rounding that you've done there is not going to change the answer at all. So for the first one, we end up with a cost of $3.90. For the second one, we end up with a cost of $3.79, and the third one, $8.63. All we need to do now to finish this off is pop them into this table. So we've now got our prime costs added in. Don't forget about these prime costs, because if you're asked to work out total costs with activity-based costing, by the time you've actually calculated your total overhead cost, it's very easy to actually forget about the prime costs. So let's just pop these in. We've got $3.90, $3.79 and $8.63, and that gives gross profit of $1.10 for product A, $1.21 for product B, and actually a loss of $3.63 for product C. So how does that compare when we did traditional absorption costing using labour hours? Well, I've just written on the bottom here what the actual outcome was when we used traditional absorption costing, and you can see it's very, very different. Product A, we did think was making a loss, but actually it's making us a profit. So we may have made the decision to even discontinue that product when it was profit making, and that clearly would be the wrong decision to make. Product B is making a profit, but it's not making as much profit as we thought it was. It's making $1.21. We thought it was making $2.16. But really product C is the major one where there's a huge difference, because we did think it was making us a big profit. We thought we were making $2.16 from each unit of product C, when actually it's incurring us $3.63 loss. Now, we may have spent loads of money on marketing that product, and that would clearly be the wrong thing to do because it's losing us money hand over fist. So why has this actually happened then? Well, let's just have a look back at our volumes again. You can see that if we actually looked at the percentage of the volume of A, B and C, we only make 2,000 units of product C, and that equates to only 4% of our production. Now, the 17268 is actually 9% of the total overhead cost. However, the real impact that activity-based costing has had is that because we've got such a low volume product, when we actually take that 17268 and divide it by 2,000 units, our cost per unit is much, much higher than it is for the other two products because they've got much, much higher volumes and therefore the cost can be spread much more over a larger volume. Under absorption costing, because this was a low volume product, it wouldn't have been charged with very many overheads because labour hours, they didn't take many labour hours because that was a low volume product, so only 2,000 units worth. Most of the overheads would have been incurred by A and B, or rather they would have been absorbed by A and B. So under activity-based costing, we've got a much fairer reflection of how much product C actually does cost us, and we can see that it's actually making a loss. In section 3.1, we can see when activity-based costing really should be used. The first point is that when production overheads are high relative to prime costs, so for example in the service sector, then activity-based costing is going to be much, much more useful. In the modern business environment, this tends to be the case because there's more technology and there's more mechanisation, so there's very many more production overheads than there ever used to be. Years ago, the prime cost was the main element of the overall cost, so it didn't really matter too much how we allocated our overheads because it was a very small part of the overhead cost, the overall cost. So now we do need to think much more about how we do it because production overheads are much higher, so it matters more. When there's diversity in the product range, then we also need to think about using activity-based costing because there's lots of different cost drivers. Okay. When there's considerable differences in the use of resources made by different products. If clearly there's lots of different activities, lots of different drivers, but each of the products uses the same amount of them, then really what you're going to get is something similar to normal absorption costing. So you've got to have differences in their consumption for it to be useful. And you've also got to have some of those drivers that are not volume related. So we've seen in the lecture example how it can make a huge impact when you've got small volume products rather than large volume products because there's just fewer units to spread that overhead cost over, even though they might be quite overhead intensive in terms of causing those overheads. So what does activity-based costing allow us to do? Well, unless we can actually identify how our overheads are being caused, we can't control them and reduce them. So if we can identify what the driver is, that shows us what is causing that cost to go up, and therefore we can reduce the driver and thereby reduce and control our overheads. We can also have better costing information to assist us with our pricing decisions. So if we currently thought that something was a much lower overhead cost than it was, then it means we've been underpricing that product. And that's important because it means we've not been recovering the full cost of it. It could also work the other way round in that we may have been overpricing our products. Now that's important because we may have been pricing ourselves out of the market, allowing competition to underprice us. It allows us to think about our product mix. So which products are the most profitable and which products are the least profitable. And doing this profitability analysis means that we can start to think about marketing, advertising, etc. We can also do it by customer and clearly by product line. There's a technique called customer profitability analysis that you'll look at later in your studies. It also means that we've got more realistic costs in order to assess performance. Perhaps more important here is that we can actually match up costs with the budgets and therefore the budget holders who are really responsible for them. So instead of just putting a lump of overhead onto a budget statement without any real knowledge of what the cost drivers are and then holding that manager accountable, we can actually identify who can actually influence each cost driver and associate it with their particular budget. We'll consider something called activity-based budgeting later in the course. What are the criticisms of activity-based costing? Now, some of these criticisms are just the opposite of when activity-based costing should be used. So in a question, you've got to be quite careful about whether you just put the opposite of something, because you'll only get 1 mark for it. You won't get 1 mark for each point. But there are some different ones here as well that we need to be aware of. The first one is it can be quite time consuming and expensive. Not only have we got to set up all the systems, we've also got to collect all the data that will allow us to correctly analyse and allocate our activities and our cost driver information. It is going to be of limited value when we've got volume related overheads. It's also going to be of limited value when the company is producing only one product or a range of products with similar costs. So we really covered those before when we were looking at the uses of activity-based costing. There's a problem when we've got particularly complex situations where there might be multiple cost drivers. So when we're asking, well, what causes this? It might be more than one thing. Now, in that case, we may have to make an informed decision as to which is the best cost driver to use. And there's going to be some overheads that don't really fit nicely into a cost pool at all. And that means that we've got still a little bit of arbitrary apportionment that may still exist. Now, it's useful just to note that IAS 2 doesn't require us to do activity-based costing. It only requires basic absorption costing. Lecture example 3 has got 2 statements that have been made about activity-based costing. We've got to select which of the above statements is or are true. So, statement 1, implementation of activity-based costing is unlikely to be cost-effective when direct material and labour production costs comprise a low proportion of total production costs. Now that's not true, because it's when that's actually the case that it's actually going to be very useful to use activity-based costing. Remember we said that it's useful when we've got high overheads. So that's the situation that's described here. Statement 2, where most of the overheads are facility sustaining, activity-based costing is likely to be of little use. Well, that is true, because most of the cost being facility sustaining means that we're going to get very much similar results when we use activity-based costing and absorption costing. Remember, it's when we've got either batch or product-related costs that we're going to get differences between the two systems. So the only statement that's true there is statement 2, which is B.